Central Bank Governor Raghuram Rajan has decided to spring a surprise once again, this time keeping key rates unchanged, even though the consensus was that he would raise rates to tame sticky and runaway inflation. Remember, inflation in the month of November had touched a 14-month high. Even retail inflation had touched very high levels, but Raghuram Rajan there deciding to keep rates unchanged, focusing on growth and saying that he will take a call after seeing which way inflation moves. Let's actually listen in what he had to say at a press conference just a short while ago.
Let me start with a short statement. Good morning. Recent readings suggest that headline inflation, both retail and wholesale, have increased, mainly but not exclusively on account of food prices. While core CPI and core wholesale price index, that is inflation excluding food and fuel, have been stable, despite a steady and necessary increase in government-administered prices towards market levels, the high level of core CPI inflation leaves no room for complacency. There is, however, reason to wait before determining the course of monetary policy. There are indications that vegetable prices may be turning down sharply, although intermediaries could impede the full pass-through into lower retail inflation. Our own current readings from the metros suggest a significant fall in vegetable prices, both at the wholesale and retail level, which gives us reason to make this statement. In addition, the disinflationary impact of recent exchange rate stability should play out into prices. Finally, the negative output gap, including the recent observed slowdown in services growth, as well as the lagged effects of effective monetary tightening since July, should help contain inflation. This policy decision, which is to stay on hold, is a close one. Current inflation is too high, and I repeat, it is too high. However, there are wide bands of uncertainty surrounding the short-term path of inflation from its high current levels. Given the weak state of the economy, the inadvisability of overly reactive policy action, as well as the long lags with which monetary policy works, there is merit to wait for more data so that uncertainty can be reduced before we act. There are obvious risks to waiting for more data, including the possibility that tapering of quantitative easing by the US Fed may disrupt external markets, and that the Reserve Bank may be perceived to be soft on inflation. Let me assure you that the Reserve Bank will be vigilant. Even though the Reserve Bank has maintained status quo today, it can help guide market expectations through a clearer description of its policy reaction function, which is, if the expected softening of food inflation does not materialize and translate into a significant reduction in headline inflation in the next round of data releases, or if inflation excluding food and fuel does not fall, and note there's an or here, which means both conditions have to be met, the Reserve Bank will act, including on off-policy dates if warranted, so that inflation expectations stabilize and an environment conducive to sustainable growth takes hold. The Reserve Bank's policy action on those dates will be appropriately calibrated. Finally, let me add that following our commitment to restore economic value to financially distressed projects and to clean up problem assets in the financial system, the Reserve Bank has put out a discussion paper for comment yesterday. After a comment period of 2 weeks, we will issue the appropriate circulars. With that, I'm happy to take questions.
Yes, Lata Venkatesh from CNBC TV 18. Governor, we were expecting a Volcker, we've got a Yellen. Well, you know, your trajectory is, which you gave us in the October policy, would indicate that your forecast would be, at this moment, it should be something like below 9%, the CPI inflation, if you went by your fan chart. You are 2.5 percentage points higher than where you were. What do you want your next reading to be? How should we read the RBI? Should it be like, if it came at 10.5, how should we understand? If it came at 10, what should we understand? Does it satisfy your trajectory?
So, first, to your Volcker, Yellen, etc., how about Raghuram Rajan? Right? No, I think it's important to resist the labels of dovish, hawkish, etc. We are trying to calibrate monetary policy primarily to target inflation in an environment where the economy is weak. So when we take action, we have to be convinced that the action is merited at that point, which is why we're waiting to take
RBI
action.
Governor Raghuram Rajan there explaining the rationale behind keeping key rates unchanged, at the same time issuing a clear warning out there that inflation expectations will be managed and that he would raise rates if inflation does not cool down, saying that inflation is being driven mainly by food prices and there is a considerable indication coming that vegetable prices are likely to soften, which will help cool down overall inflation. And if that is the case, then he would keep rates unchanged.